Good morning, everyone. Good morning, Kishore. Good morning, Niranjan. Good morning. So, in yesterday's session, we started off with Ind AS 19 that deals with employee benefits. So, as part of our discussion, we went through the scope of Ind AS 19. What was the reason a separate standard was introduced? What do we have as far as the coverage is there in this standard and what is excluded from the scope of this standard? And we also saw the uh, definitions of employee and employee benefits, which is not restricted to payments to the employee only, but also to his family. So after this, we moved on to the various categories of employee benefits, which is broadly four: short-term, post-employment, long-term, and termination. In short-term benefits, it includes your regular salary, wages, contribution to funds, social security funds, compensated absences. So these were the three things which we saw. Accounting for short-term benefits is fairly simple. There are no actuarial assumptions involved, no complex calculations, no uncertainties, no discounting. It will be a straightforward calculation of debiting the employee benefit expense. If you are working on an asset, then capitalize it to the asset and credit payable or cashback as the case may be. So that is your accounting for short-term benefits. In your compensated absences, you have two types: accumulating and non-accumulating. So in your non-accumulating, the leave does not get carried forward. And as the leave does not get carried forward, it will lapse when there is any unavailed leave that you are having. On the other hand, you have accumulated absences where there are two types: vested and non-vested. Vested means you will get cash against the unutilized leave, and non-vested means you are able to carry forward the leave to the subsequent period. So that is as far as compensated absences were concerned. The key point is you are going to accrue the cost depending on the estimate of the leaves that you will utilize in the case of non-vested accumulating benefits. So that is your short-term benefits. Then we moved on to post-employment benefits, which is broadly categorized into defined contribution plans and defined benefit plans. The hallmark or the major difference between these two is the defined contribution plans, the investment risk, actuarial risk is all on the employee himself or herself, not on the entity, because the entity's obligation is only to make the contribution to the fund, and thereafter the obligations by the employer are fulfilled. However, in the case of a defined benefit plan, the payment is made either in accordance with an agreed amount, a lump sum, or some plan formula. This could be your gratuity, your pension, or whatever the case may be. So now the problem in your defined benefit plan is it is far more complex, huge number of uncertainties in the form of mortality, disability, attrition, future salaries, salary increments. All these are things which we will obviously have a lot of uncertainty in determining. We call these as your actuarial assumptions, and they are categorized into two parts. One is your demographic assumptions, and the other is your financial assumptions or economic assumptions. So any change in your actuarial assumptions arising out of experience, it's very normal for these things to change. So any change in your actuarial assumptions is something beyond the control of the entity, and therefore it is taken to your statement of other comprehensive income, and it is non-reclassifiable to the P&L. So from OCI, it will move directly to the reserves. So that is as far as your accounting treatment is concerned. Then we saw questions that involved build-up. We saw the projected unit credit method application, whereby we divide the total amount payable, determining the ultimate cost of benefit and spreading it over the years that the employee is expected to serve. And once I spread it, I will calculate the present value of those units. And that present value is what is known as current service cost. The current service cost will be accrued with the unwinding of discount that I had taken. And then you will add the current service cost to arrive at the closing balance of the defined benefit obligation, what we call as DBO. So that will be carried forward each year. So this was where we had stopped. Then we saw one thing, that is past service cost. This is where you are modifying the plan. So the modification of the plan will be taken in the current period because this is within the control of the entity. So in this case, in one of the examples, we saw that the plan formula was changed from 1% to 2.5% of the amount payable based on the last drawn salary. So because of this, there is a surge in the benefits that need to be paid. So this surge will be accounted in the P&L in the year of such modification, in the year of such modification. So I hope that until here we were comfortable and there is no query as far as this is concerned. Okay. So past service cost, we have seen this happens due to basically a plan amendment. This happens due to a plan amendment. Okay, so with that, let us move further. Okay. Now, I'll come to settlement with the help of an example. I will not be running through this theory at the moment because I feel the example will be more exhaustive in understanding the applications. And then we shall come back to the theory, or you can go through the theory as part of your homework for understanding how or what actually happens in a settlement. So we have curtailment as well as settlement in one of the questions. We do those questions and I think you will be fine as far as the understanding of curtailment and settlement is there. Okay. So we have discussed almost computing the ultimate cost of benefit to the entity. Coming to the next one, we need to discount it to the present value to determine the present value. We have done this discounting. We have applied the 10% discount rate, which was given in our questions. But my point is, what is the discount rate to be used? Now, this is the theoretical part of it. What is the discount rate to be used for determining the present value? So general rule is we should be using market yields at the end of the reporting period, on government bonds. So market yields on government bonds is the discounting rate that should commonly be used. For currencies other than INR, for which there is a deep market in high quality corporate bonds, currency and terms of these bonds must be consistent with that of the post-employment benefit obligations, obviously. So when we are taking your high quality corporate bonds, or you are taking your government bonds, the terms should be, the tenure of these instruments must be consistent with that of the tenure of your post-employment benefit obligations. Okay. So that's all that you can take from this particular page. Okay, that's just theory for you to understand. All right. Now we come on to the next one, that is fair value of plan assets. Okay. Now this is what was the topic that Monica raised yesterday. So we come back to that discussion. So now tell me one thing, making a provision, the defined benefit obligation that we saw yesterday. Yes, we saw the build-up, we saw the amounts. Tell me one thing, is it only a book adjustment, or am I setting out some cash in the entries that we saw yesterday?
Setting out some cash.
We have not set out any cash yesterday. What we have done yesterday.
Yesterday only book adjustment has.
सिर्फ बुक एडजस्टमेंट हुआ है और कुछ भी नहीं. क्या किया था हमने? What did we do yesterday? Employee benefit expenses to provision for employee benefits. Employee benefit expenses to provision for employee benefits. Can I do this freely throughout my life? Yes?
No, sir.
नहीं, मतलब कायदे से तो ये तो कर ही सकते हो ना. पैसे ना तो जा रहा है, एंट्री लेना है बुक्स में. The moment you take this entry, have you complied with the standard? Answer is yes. See, standard does not require you to have any cash assets or backing of the obligation. Okay. The moment you make this provision, आपका काम हो गया. So entities can go on making this provision period after period after period and say that they have complied with the standard, and auditors also will obviously have to mention they have complied with the standard. But practically सोचो, आप provision करते रहोगे, you go on making the provision. Why? There will come a moment in life when you have to pay that amount, right? So when there comes a moment in life when you have to pay that amount, now you went on accruing without looking at the consequences. And suddenly, let us suppose 8 of your high cost resources are due for retirement in the same year. Out of 100, 8 of your high cost resources are due for retirement. You have to pay the employment benefits. You have to pay the gratuity, pension, whatever is there. The question is, where is the cash? The question is, where is the cash? And this is where the importance of having a funded obligation is going to help you. Basically, what we talk about, setting aside the cash. We talk about setting aside the cash. So when I talk about my defined benefit plan, they broadly fall under two categories. One is non-funded, that is without any asset backing. The other is a funded plan, or the one with an asset backing. So non-funded plan is what we saw yesterday. It is a provision for defined benefit obligation, which is a non-cash provision, Cash is not set aside. What is the risk? Cash may not be available at the time of payment of the defined benefit obligation. Are we convinced with this? Yes, everyone?
Yes, sir.
All right. Now we come to the other part. Now, to mitigate the risk of not having cash, entities will put their money in certain funded assets, Okay. Provision for defined benefit obligation is made and cash is set aside and invested. And normally, where will you put this cash? Will you put it in equity shares or risky instruments like cryptos or whatever is there? No, you cannot put it in that. This is for your employees. You will generally opt for something that is relatively risk-free, like government securities or deposits. Okay. What is the intent of these instruments? Is it for you to earn income or earn profits? Or is it for meeting the liability when it becomes due? Obviously, it is for meeting the liability when it becomes due. You are not profiting out of this. It is basically ensuring your employees have a secure uh, payout at the time of their retirement. Okay. So these two things, these are the two objectives behind setting up of cash. Okay. Now, in what do I invest? There are two options normally. And this is, again, I'm telling, this is not mandated by the standard. It's recommendatory. Okay. It's recommendatory. Standard will not default you if you don't have a plan asset. Okay. If you don't have assets backing your obligation, standards will not question you, or you cannot say you have violated the standard. Okay. So there are two modes of investments. First one is I create a separate entity. Okay. I create a separate entity. We call that as the investment entity of these employees' obligations. Okay. Investments are held by this entity, and these investments are used solely for payment or funding of employee benefits. Coming to modes of investments, the second option is I take a qualifying insurance policy issued by an unrelated party, and proceeds of the policy are used solely for payment or funding of employee benefits under defined benefit plans. Key point to remember is typically these securities cannot even be used in the times of bankruptcy. They are exclusively for your employees alone. Okay. Have you understood the objectives? Yes, of these plan assets?
Yes, sir.
Acha. Now, let me just for brief period, let me take you to the scope. You remember the scope? I had left one point. Accounting and reporting by employee benefit plans. Employee benefit plans. So what is your employee benefit plans? You saw now, I set up a different entity. That entity holds the investments for the purpose of these obligations. The reporting of that entity is not covered under Ind AS 19. Are we able to correlate now? Abhi samajh mein aa raha hai what is this? Yes. All right. So that takes care of this part. And now let us come back to our discussion. Okay. So determine fair value of plan assets. When we talk about a qualifying insurance policy, Hemant, it means policies which are in line with your requirements. So typically you have LIC or certain other similar organizations where they come on board with you to understand the objectives behind taking the insurance policy. And then you have to make a certain premium payment and they will take the responsibility of covering up your employee benefit obligations. Okay, all right. So that takes care of fair value of plan assets. Okay. Now, very simple concepts are there before we move on to the merger. See, yesterday हमने क्या किया? हमने liability समझ लिया. आज हम अभी the next 15-20 minutes we will understand the assets. And then I will start to merge employee and assets, I mean the liability and the asset together to actually look at the reporting in the financial statements. So that is going to make you more, that will make it more clear to you for the purposes of understanding. Okay, all right, fine. Now, from the following information, compute the actual return on plan assets in respect of Vinayak Limited for the year ending 31st March 2020. Okay. So I have benefits paid 5 lakhs. Employer's contribution during 2019-20 is 7 lakhs. Fair value of plan assets at the year end is 28 lakh 50. And fair value of plan assets at the beginning of the year is 20 lakhs. So you are required to calculate what is the actual return on plan assets. So coming to the working, very simple. Okay, bologe sir ye bhi aata hai kya? This is just an introductory session. Okay, an introductory question. Opening balance 20 lakhs, closing balance 28 lakh 50. You have contributed 7 lakhs. And you have paid out 5 lakhs. So the differential 6 lakh 50 is what is your actual return on the plan assets. Many times books are going to give you this statement, but this statement is nothing but the outcome of the above account. Ye theek hai? I hope you have understood this. So 6 lakh 50,000, whatever it is, 6 lakh 50,000 is your calculation. Okay. कुछ है नहीं उसमें. All right. Now, how do I present in my financials? We arrive at something known as deficit or surplus. See, on one side, I have a defined benefit obligation. On the other side, I have plan assets. Tell me one thing. Can I use this plan assets for anything other than defined benefit obligation?
No, sir.
No. So I will obviously have to net it off. I will obviously have to net it off. तो मैं net off कैसे करूंगा? In your balance sheet, आप क्या disclose करोगे? Defined benefit obligation you will disclose, or you will disclose and account and measure the present value of defined benefit obligation. What are you going to do?
Present value of defined benefit plan.
Present value of DBO. So balance sheet में जो दिखेगा, that is the present value of the obligation that you have to pay. Now, this present value of defined benefit obligation के सामने you are going to have these plan assets. So I will do a netting off. I will do a netting off. Okay. So present value of defined benefit obligation minus fair value of plan assets is always what I am going to do. The resultant is going to be something known as deficit or surplus, is known as deficit or surplus. If the obligation is higher and the plan assets are lower, then it will be a deficit. If plan assets are higher, obligation is lower, it will end up being a surplus. Typically, organizations, what do you think will they work with? Will they work with a deficit or will they work with a surplus? What would
Sub
बोलो?
surplus,
नहीं, surplus नहीं होगा. You understand one thing. What is the objective of these plan assets? To
sub pay.
fund my obligation.
Yes, sir.
Suppose कीजिए आप कि my obligation is going to come after 20 years. ठीक है? So do you think I will keep funding the entire obligation and keep my money blocked? This is the business side of it. This has nothing to do with accounting. भाई मैं 20 साल अपना पैसे ब्लॉक करूंगा without any support for me, because once I put money in that, it is like I have foregone that cash. So normally they operate on a small deficit. There is no harm in having a deficit. Okay. Rarely we see entities where you have a surplus. Okay. So they work on a small deficit. Itna to cash banta hi hai that will be generated out of that year's operations when the settlement happens. So they normally know the cycle. They know their cash generations. So they will say, okay, jab wo retire hoga, whatever is the deficit will meet out of that year's cash generation, and obviously whatever plan assets we have accumulated. But going into a surplus is something which is not very common, So when I talk about fair value of plan assets, it will be assets held by the fund plus any qualifying insurance policies. Okay. All right. So isko bolte hain deficit or surplus. All right. Now let us come to certain small points here and there. Entity has more than one defined benefit plan. Gratuity, there is one plan. Pension, there is one plan. Superannuation fund, there is one plan. Then separately apply these procedures for each material plan. Acha. Okay. Coming to the next one, encouraged but not mandated to use a qualified actuary. Okay. Now, this is the first time the standard tells that it's recommended to use an actuary. AS 15 did not mention the requirement of using an actuary. We were using it because they were the qualified people to do this. But in Ind AS 19, you are seeing this recommendation for the first time. Valuation to be done before the end of the reporting period and results updated up to the end of the reporting period. ये तो सबको पता है. Okay. Estimates, averages, simplified computation may provide reliable approximation in some cases. You don't have to be accurate because these are liabilities and plan assets with a horizon that spans across decades. So you can make some realistic assumptions, some extrapolations, as far as you are getting nearer to the value that is being estimated. Okay. See, remember, what is the auditor certifying in your financials? What is he certifying? When you have the audit report, what comes out of it? It is certifying that these financials present a true and fair view of your results as well as the position. So it's true and fair. It's not true and correct or true and accurate. Okay, so they are not really going to look into the last decimal to see whether your discounting rate has come properly or not. But on a pervasive basis, if you are able to meet the disclosures, etc., figures, assertions that you have made, then that's fair enough. That becomes true and fair. So don't go for accuracy in such cases where the horizon of estimate is extremely high. Okay, extremely long. You can make some realistic assumptions, and as long as it approximates to the value, that is adequate compliance. Okay. Account for legal and constructive obligations. We saw what is constructive obligation. You may not have a legal paper to back it, but you have set expectations in the minds of the counterparty and you have no alternative solution other than to meet those obligations. So usko hum log bolte hain constructive obligations. It is assumed that benefits continue to be provided under DVP over the remaining working lives of the entity. Okay. So that is done. All right. This is something which I have just put it up, whatever I have explained. I'll come to you, Hemant. Okay. Qualifying insurance typically could be the value that the insurance entity only gives. Depending on the premiums that you have paid, the investments that is made, the insurance entity only will give the value that you are having. Insurance entity is basically putting your money in certain assets, earmarked for your obligation. Okay. So that is the same thing like your plan assets. But only thing is you don't have the headache of identifying the assets and putting the money there. You are handing it over to the insurance policy to take care of it. Okay. All right. Okay. So if the difference is positive, liability minus plan assets, then we call it as deficit. It is a net defined benefit liability. It is recognized in the balance sheet as provisions under non-current liabilities. Typically, you identify what is going to be paid within the next 12 months and what is going to be paid beyond. So normally that goes under current and non-current liabilities. Okay. Now, suppose I have a net defined benefit asset for one of the plans and a net defined benefit liability for one of the plans. So in my, suppose the gratuity plan, I have a surplus. In my pension plan, I have a deficit. The question is, can I set off both? Can I set off both or should I present them separately? So this is permitted only if it is legally permissible to use the surplus here to meet the deficit in that plan. And it intends to settle the obligation and realize the surplus on a simultaneous basis. This is what is there in your Ind AS 32 as well when we talk about setting of financial liabilities against financial assets. Okay. Have you understood this part? Yes. सबको समझ में आ गया? Jeannie, Monica, Hemant. Yes. All clear?
सर ये जो सेटलमेंट सेटिंग ऑफ का अपने प्रोविजन बताया, एक बार प्लीज रिपीट कर दीजिए.
अच्छा, ये वाला ना, लास्ट वाला.
यस सर.
Okay. So suppose I have a gratuity plan. Okay. Gratuity plan is a deficit. Deficit मतलब क्या? DBO is greater than plan assets. Okay. And I have a pension plan. I have a pension plan. Pension plan में क्या है? Suppose I have a surplus here. Surplus means what? My obligation is less than the plan assets. So in your balance sheet, we saw the previous point. This has to be done on a plan-wise basis. So I have a deficit here. I have a surplus here. The question is, can I set off these two, deficit of one plan against surplus of the other, and present a single net figure? That is the question. Answer is, you can set off only if the offsetting criteria in Ind AS 32 are fulfilled. Now, what is that offsetting criteria? That offsetting criteria states that if it is legally enforceable right to settle the obligations against the surplus of the other. So if it is legally enforceable कि आप pension plan का surplus deficit के सामने use कर सकते हो, if it is legally enforceable, and second one, it intends to settle on a net basis only, or it intends to realize the surplus and settle the liability simultaneously. मतलब इसका settlement of this deficit will happen concurrently with realization of the surplus in this plan. अगर ये चीजें होती है, legal enforcement plus simultaneous settlement or net settlement. If that is how you do it, then there is no harm in offsetting. Otherwise, please present your deficit separately. Please present your surplus separately. ठीक है? Did you understand, Monica?
Yes, sir.
अच्छा. Coming to the other part, I have already explained negative. Negative matlab kya? My assets are more than the obligation. It becomes a net defined benefit asset. And this will appear in the balance sheet. This will appear in the balance sheet at what value? It will appear at either the surplus as computed above, surplus as computed जो हमने किया defined benefit obligation minus plan assets, straight away that figure, and it will be restricted to asset ceiling. It will be restricted to asset ceiling. What is asset ceiling? Asset ceiling is the present value of economic benefits available in the form of refunds from the plan or reduction in future contributions to the plan. See, ultimately, you may have DBO minus plan assets as any figure, but this figure should be a realizable figure, right? This figure should be a realizable figure. You should know कि भाई मुझे इतना पैसा तो कम से कम मिलेगा. So this figure is restricted to asset ceiling. Now, what is asset ceiling? It is the present value of economic benefits that are available in the form of refunds from the plan. और अगर आप प्लान से refund नहीं लोगे, if you are not taking a refund from the plan, because ultimately you also have to contribute to the plan, then in the future you will make reduced contributions. So either you get a refund or you reduce your contribution. That becomes an economic benefit for you. So the amount of this economic benefits in the form of refunds or reduced contributions is known as asset ceiling. You cannot breach the asset ceiling and disclose. Okay, you have to disclose only up to the asset ceiling. Are we okay with this? Yes. So this net defined benefit asset, where do I show it? I show it under non-current assets. I show it under non-current assets. Are we okay with this? Yes.
Yes.
Presentation समझ में आ गया आपने? All right, fine. Now we come to some small questions. Okay, बहुत छोटे छोटे questions हैं. 2 seconds लगेंगे. Okay, how will the following information be presented in the balance sheet of Udyog Limited? Present value of defined benefit obligation 3,500. Present value of plan, fair value of plan assets 3,332. तो कैसे प्रेजेंट करोगे? Net it off. तो इसको आप माइनस करोगे, you will be left with 168. बोलो, is it a net defined benefit obligation or net defined benefit asset? क्या है ये?
Sir, obligation.
Obligation है sir.
Obligation, that's right. So net defined benefit obligation, or some people say net defined benefit liability. ठीक है. So coming to the next one, how will the following information be presented? Present value of DBO 2,750, 2,975. What is the difference of this?
Surplus.
225, right? Surplus आ गया. That's right, Monica. Surplus value is 225, correct?
Yes, sir.
But I'm going to restrict it to what? I'm going to restrict it to 175. 175. Okay. So that takes care of that part. Okay. Now, let us move on to the other parts. Now, remember, I have liability on one side, I have asset on the other. Abhi, before we directly start netting off, understand liability build up kaise hota hai? How does my liability get built up? Projected unit credit method. I divide the total ultimate cost of benefit divided by the number of years. I get the total, I get the per year cost that I will discount it to present value. That will give me my current service cost. And this current service cost will build up to the ultimate cost of benefit on account of unwinding of the discounting. So what is hitting your P&L? Current service cost as well as the annual unwinding of discount, which we call as interest. Are we okay with this? Yes, ये चीजें समझ में आ गई?
Yes.
Yes. Coming to the second thing that is hitting my obligation is past service cost. There is a plan amendment, there is a plan settlement or curtailment. Because of this, something of the past gets hit in the current year. That also goes to my P&L. Are we okay with this? So I'm having two components. One is the service related costs, past or present, which hits the P&L. The other side is the interest on the obligation that is getting unwound year after year. ये हो गया ऑब्लिगेशन का साइड. कमिंग टू दी एसेट्स. एसेट्स में व्हाट हैपेंस? इन दी एसेट्स आई एम हैविंग contributions which I make. Okay, so contribution will increase the plan assets, and along with contributions I will have actual interest that the assets are going to generate. Are we okay with this? Yes.
Yes, sir.
इसके अलावा there is a third thing. There is a third thing. What is it? Actuarial assumptions change. Okay, demographic factors change. COVID आ गया, huge change in actuarial assumptions. Yes. So now all these things will give rise to something known as actuarial gains or losses. Yes. So that actuarial gains or losses is another item that is going to impact my defined benefit obligations or plan assets. And finally, आपके पास रहेंगे asset ceiling. You are having your asset ceiling. So now these are the recognition principles for all these items, whatever we have studied. We have studied all these items, covered also all these items. So current service cost, past service cost, gain or loss on settlement. I have not explained to you the theory, but we'll look at the question, you will understand. This past service cost arises due to plan amendment. We have done that. Curtailment we will do. So this comes to the profit or loss. This part is absolutely clear. We have practically done all the questions. Interest on the obligation, interest on the plan asset. Do I net it off? Answer is yes. Answer is yes. Sir, why do I net it off? This interest is not available for the entity as other income. This interest is going to be reinvested in that asset. Matlab, this interest is specifically for meeting your obligation. That is why they are legally meant to be set off against each other, and therefore we are netting off that interest. So we call it as net interest on the net defined benefit liability or asset. Are we okay with this? Yes. Yes. Is
Yes,
it?
sir.
Yes.
Now, so this is basically interest on defined benefit obligation, the unwinding, what we discussed, and the other side is interest earned on plan assets. Interest earned on plan assets, calculated at a specific discount rate. Interest expense also hits the P&L. Interest income also hits the P&L. So the net interest that happens, that will go to the profit or loss. Are we okay with this? Yes. Service cost related hits the P&L. Net interest hits the P&L. Remeasurement of the net defined benefit liability or asset. Actuarial gains and losses. Return on plan assets. Any change in the effect of existing ceiling. These remeasurements will go to other comprehensive income without reclassification. Okay. When I talk about any change in the effect of asset ceiling or return on plan assets, it is excluding the interest, because interest portion goes to the P&L. That is what is mentioned here. Excluding amounts included in the net interest on net defined benefit liability or assets. When do we do the remeasurements? We do the remeasurements whenever the assumptions change. This comes out of experience adjustments. Okay. So suppose you had estimated in 2018 that the lifespan will be 50 years. Okay. From the date of joining. COVID ho gaya. And then today we are seeing whatever is the aftermath of the COVID vaccines, etc., whatever we have taken. So this will cause you to remeasure the life expectancy of the individual. इसको हम लोग बोलते हैं remeasurement or revisiting the actuarial assumptions. Because this actuarial assumption has changed, Will your obligation undergo a change? Answer is yes. Why? Because a liability which was due after 50 years is now probably becoming due after 30 years itself, depending on the mortality of the individual that you are estimating. And therefore, we do a remeasurement. Therefore, we do a remeasurement. Are we able to follow? Yes, Hemant, I hope you understood. Okay, all right. So, remeasurements go to the other comprehensive income. Did we understand? Yes. Are all these things clear?
Yes, sir.
Yes. Service cost, net interest, remeasurements. Okay. Net interest on the defined benefit liability or asset. Typically, we take opening balance of defined benefit liability into the discount rate. On remeasurement, so these are the methods of calculating. I think honestly, इसको आप अभी पढ़ोगे, you will not understand. We'll do the questions, you will understand, and then you can go through this. Okay, all right. Remeasurement also, we will see the questions, and then you will understand it better. Okay, but otherwise, have you broadly understood? I'll run you through the questions step by step. I'll run you through the questions step by step. But otherwise, is it okay? Yes. अभी तक सब समझ में आ गया? Yes, all right.
Yes, sir.
So let us come to the questions. This is an additional question, but it is similar to the study module question that is there. Okay. Bharat Power Limited is a company with a turnover of 27,500 crores, having a large employee base. The company has provided a defined benefit plan to its employees. The following information pertains to the balances of the fund's assets and liabilities for the financial year 1920. You are having the present value of defined benefit obligation, opening balance, closing balance, fair value of plan assets, opening balance, closing balance. For the financial year 1920, the service cost was 1.65 crores. The company made a contribution of 3.33 crores to the plan. No benefits were paid during the year. Consider a discount rate of 8%. Required, compute the balances of the company to be included in its balance sheet, as well as amounts to be recognized in the statement of P&L and other comprehensive income for 2019-20, and give the journal entries in respect of the amounts to be recognized. Is it okay? Yes. Shall we start? Anybody has any doubt so far?
No, sir.
Okay, so let us start. So what I will be having is, you have two options. One is you prepare a net defined benefit asset account or a net defined benefit liability account and do all the calculations and journal entries in that one single account itself. Something which you can do, it's permitted, but something which I will not prefer, because हम क्यों prefer करें? When I have liability separate, assets separate, let us do the working separately. बाद में netting off तो कर ही सकते हैं. We can do the netting off separately, right? So if I look at this question, let us look at what all I am having. Okay, all right. We start up with plan assets account. Yes. Plan assets. What is your opening balance? 3,420. 3,420. What is your closing balance? 3,825. Yes. Is it clear? Next. The company made a contribution of 3.33 crores. So in lakhs, it becomes 333. So to cash bank, employer's contribution is increasing the asset value 333. There is no benefits payout. So if I balance this, I am getting 72 lakhs. What is this 72 lakhs? This is your actual return on plan assets. Actual return comprises of two things. One is it will comprise of the interest, which is basically opening balance into interest rate, plus any remeasurement change that happens. Okay, so this generally comprises of interest plus remeasure. Are we convinced on this? Plan assets? Yes, anybody has any doubts?
नो सर।
इसी को इन्होंने स्टेटमेंट फॉर्म में कर दिया। क्लोजिंग फेयर वैल्यू लेस एम्प्लॉयर कंट्रीब्यूशन एड बेनिफिट्स पेड लेस ओपनिंग फेयर वैल्यू 72. Okay, so this is a straightforward working. Coming to the obligation, what is the opening value of the obligation? 4,200. Closing value 4,740. So opening credit 4,200. Closing credit 4,740. All right. Now, do I have your current service cost? Yes. For financial year 1920, service cost was 1.65 crores. Tell me, service cost, is it increasing your obligation?
यस सर।
ऑब्वियसली एम्प्लॉय इस साल काम कर रहा है तो आपका ऑब्लिगेशन बढ़ेगा. So the entry will be current service cost, that is the P&L account debit to provision for defined benefit obligation. Okay, so that 165 is enhancing your obligation. Coming to the next one, no benefits were paid, but you have a discount rate of 8%. Now, what do I do with this 8%? This 8%, you have brought it to the present value. आपको present value calculation नहीं करना है इस question में, because it's already done and given to you. But there is one thing that you will have to do. On 4,200, do I have to unwind this discount and show it as a finance cost? Answer is yes. Show it as an interest cost. Yes. So therefore, 4,200 into 8%. This is your interest cost of 336. Are we okay with this unwinding of discount? Yes.
यस सर।
So this figure goes to the P&L. This figure also goes to the P&L. This figure of 39 is a balancing figure, which is nothing but actuarial loss, Are we able to understand?
यस सर।
So 4,740 is your defined benefit obligation account ka total. And now what you have to do, now you just pick up the opening balance here, closing balance asset, closing balance liability, interest cost asset, interest income asset, interest cost liability, and then you do a netting off. Actuarial loss goes to other comprehensive income. That's what we have done, na Hemant? I have told you already. Okay. Actuarial gains or losses will go to other comprehensive income, and that is non-reclassifiable. Okay. So now, how do I recognize these items in the financial statements? Netting it off. First one, opening. Opening mein, I am having obligation plan assets. What is it? Net defined benefit asset or net defined benefit liability? क्या होगा? Net defined benefit liability, because obligation is greater than assets. Yes or no?
यस
Yes,
सर।
sir.
So 780, which is nothing but 4,200 minus 3,420. Okay. All right. Next. Closing is there. So opening. Okay. Closing. Can I do the same thing? Yes. Is it an obligation? Net obligation? Answer is yes. So 4,740 minus 3,825. So that comes to 4740 3825 915. Are we okay with this? Yes.
यस सर।
Yes, sir.
All right. Coming to the next one. See, I have an asset of 3,420. Discount rate is given to you as 8%, opening asset. So 3,420 into 8% gives you how much?
273.6.
273.6 or 274 is your interest income. And there you have your interest expense of 165. Are you sure about this? Okay. And there, sorry, 165 was service cost. I'm sorry. Okay. 4,200 opening balance into 8%. 336. So what is your net expense? 62. Have you understood? Yes. ये मेरा interest income हुआ. This becomes my interest expense. Did we understand?
Yes, sir.
तो हम net present करेंगे 62. We will net it off against each other and present it in the P&L as 62. Are we okay with this? So therefore, in the P&L, you will see 62. You will see 62. What they have done is they have taken the net of 780 into 8%, which is also okay. Which is also okay. No problem in this. All right. Now let us move on to the next one. Now let us move on. This is increase in liability. That is just a figure which they have given. Obvious, there is an increase in the liability. Okay. तो उससे कुछ अपने को, that is an observation. That is not any entry that we are taking. Okay. Remeasurement of obligation. 39 is your value. Okay. Is there a remeasurement of assets which is happening? Yes, I told you. This 72 comprises of two things. One is interest. What is the interest value which we have calculated just now? Interest कितना है? 274. Are yes or no? Yes.
Yes.
274.
274. But your overall surplus is only 72. So therefore, there is a remeasurement adjustment of 72 minus 274. That comes to how much?
202.
202. Are we okay with this? Yes.
Yes, sir.
Yes.
Hemant, did you follow? Vignesh, Jeannie, did you follow?
Yes, sir.
Yes. All right. Monica is there. Kishore, hope you followed. निरंजन होप यू फॉलोड ओके ठीक है सही मोनिका को भी समझ में आ गया ऑल राइट सो दिस 202 वेयर इट विल गो दिस विल गो टू अदर कॉम्प्रिहेंसिव इनकम ओके ऑल राइट तो यहां बात करेंगे 202 इज योर actuarial loss in respect of the assets. And finally, when we talk about net remeasurement, I am having an actuarial loss of 202 on the assets and an actuarial loss of 39 on the liability. So that comes to 241 actuarial loss on the overall plan as a whole. Are we okay with this?
Yes, sir.
Perfect.
Perfect.
Jeannie, did you get it? Hemant, did you get it? Yes.
Sir, why we call it actual loss 241?
लॉस क्योंकि देखो अच्छा एक काम करते हैं इसको ना लेट मी डू इट फॉर यू इन अ सिंपल टी फॉर्म यू ओनली विल टेल मी व्हाई वी कॉल इट एज अ लॉस ओके ओके ओपनिंग बैलेंस opening balance 3,420.
20.
Closing balance 3,825. Benefits paid is nil. Contribution increases the assets 333. Interest on assets is 274.
4.
Now do the balancing figure. 3,420, 333 plus 274.
Minus 202.
Yes. Minus 3,825. 202, I am getting a credit as a balancing figure. Yes.
Yes, sir. Yes, sir.
तो ये क्या हो गया? लॉस हो गया ना?
Yes, sir.
Because assets का वैल्यू कम हो रहा है. So by actuarial loss. Similarly, okay, I'll modify this solution to put the account in this manner. Okay. All right. Similarly, यहाँ पे loss, because it's on the credit side of a liability, it is increasing the liability.
Okay, okay, sir.
तो
Yes.
दोनों मिला के आपका actuarial losses
Actual loss हो गया
241.
241.
Yes, 241. And now we talk about the journal entry. So what will be your journal entry? Very simple. Very simple. What all hits your P&L? Net interest expense 62 and current service cost. Current service cost कितना है? What is your current service cost?
165.
165. So P&L account, that is your employee benefit expenses. Okay, EBE debit 227, which is 165 plus 62, 227. The other side, you have actuarial loss. So it is hitting your other comprehensive income. Actuarial loss debit 241. Credit what? Cash. This is the contribution which you are making, 333. And credit the net defined benefit liability. This is the increase. This is your increase in the net defined benefit liability. Sir, वो increase कहाँ से आ गया? Where did that increase come from? That increase came from opening balance कितना था? Opening balance was 780. Closing balance is 915. So 780 minus 915 is 135. Okay. So to net defined benefit liability, it is 135. You are having a hit in the P&L and OCI, but you are not making an adequate contribution. That is why your net defined benefit liability is going up. If you look at the debits and credits, they are perfectly tallying with each other. Are we okay with this?
Yes, sir.
And if I look at the statement of profit and loss, I will have 165 hitting as service cost, 62 hitting as net interest. Both of these go to the P&L under employee benefit expenses, and a remeasurement loss of 241, which will be in your OCI. And from there, that will go directly to your reserves as remeasurement reserve, a debit balance under other equity of 241, giving the total comprehensive income hit as 468. Perfect. So that is how you are going to do the accounting. That is how. Monica, did you follow?
Yes, sir.
Perfect. Hemant, hope you understood. Vignesh, hope you understood. Okay. All right. Fine. So that takes care of question 12. ठीक है. Okay, so let's proceed. Question 12 is done. All of it. Following items are remeasured in other comprehensive income without reclassification. Actuarial gains and losses. We have seen that already. Return on plan assets, which is total return minus net interest. हमारे क्वेश्चन में क्या था वो? Total return was 72. Return net interest was 274. Okay, on plan assets. So that gives you 202. This went into your other comprehensive income. Other than that, you also had interest in respect of that obligation, right? You had interest in respect of that obligation. वो कितना था? That was 336. That was 336. So your total movement in the liability, was 375. 375, out of which 339 came out of interest. So the remaining 336, sorry, not 339, it was 336. 39 came out of that. So these two put together, 241 became your net return, which is on account of change in actuarial assumption. So that goes and sits in your other comprehensive income. So many times, if you read the theory directly, आपको शायद समझ में ना आए. So best thing is we do a question, then we connect the figures backward. That makes it easy. Change in effect of asset ceiling. अच्छा, we saw one question जहां पे 225 and 175 आया था. The net defined benefit asset was 225, but the asset ceiling was 175. There is a gap of 50. Where will that 50 go? That will go into your other comprehensive income. Okay. After obviously adjusting for net interest. So जो भी balance है, that also goes in your other comprehensive income. Are we okay with this? Yes.
सर
Yes.
जो लास्ट क्वेश्चन था 12th, उसमें 336 भी आपने पीएनएल शो कर रखा है.
That's right. 336 P&L में ही गया है. मैं
ओके
हाँ, मैं बात कर रहा था. सी द
सर.
टोटल.
सर यहाँ पर आपने जनरल एंट्री पास करी है और एक्सट्रैक्ट फ्रॉम पीएनएल ले रखा है, उसमें कहीं पे भी 336 नहीं है. अदर कॉम्प्रिहेंसिव भी शो कर रखा है आपने. तो हमें अलग से शेड्यूल बनाने की जरूरत है पीएनएल का, कि पीएनएल में 165 एंड 336 रहेगा. जैसे अपने
आप.
सर्विस कॉस्ट का लिया 165
यस.
एंड नेट इंटरेस्ट इज ऑल्सो शो 62, बट 336 कहीं पे भी आपने पीएनएल का एक्सट्रैक्शन में इंक्लूड नहीं किया.
हाँ, नाइदर 336 दिखाया है और ना ही
हम्म.
मैंने 202 भी दिखाया है. नाइदर मैंने 274 भी दिखाया है. राइट, मैंने दोनों
राइट.
चीजें नहीं दिखाई है. मैंने नेट ऑफ करके रखा है 62. इन योर एग्जाम एंड इन प्रैक्टिकल्स ऑल्सो यू विल शो ओनली 62.
यस सर.
आप उसको नेट ऑफ करके ही दिखाओगे. सेपरेट सेपरेट आप नहीं दिखाओगे. रीजन बीइंग, दिस इंटरेस्ट इनकम इज गोइंग टू गो फॉर द एम्प्लॉय बेनिफिट प्लान ओनली. इसके लिए हम नेट ऑफ करके प्रेजेंट करेंगे. डिड यू फॉलो?
यस सर.
यस. तो आप उसको अलग अलग मत दिखाइए. यहां पे मैंने अलग कैलकुलेशन इसलिए किया सो दैट यू आर बेटर कन्विंस्ड ऑन द कैलकुलेशंस. Okay. If I
ओके
had to do a net off calculation from the very beginning, आप बोलते सर ये फिगर कहाँ से आ गया, वो फिगर कहाँ से आ गया, that connect would not be there. तो इसके लिए today now you are able to understand 62 is 335 minus 274 or
ओके
336 minus 274. So now you are convinced that 62 is net. आप net ही करके दिखाओ एग्जाम में. Okay.
ओके सर.
All right. You are at liberty to show separate accounts. You can show plan assets separately. You can show defined benefit obligations separately. You can do the working separately. But when you talk about presentation in the financial statements, you have to do a netting off. Okay, that हमेशा याद रखो. This will always be netted off. Okay,
ओके सर.
ठीक है. So that is done. All right, fine. Coming to the next one. That takes care of this question also. Question number 12. Question 11 भी कर दिया हमने. ठीक है. Now, if I look at the theory that we had left out, yes. Okay. See, if you look at this is what we have done exactly. So, net interest workings on the net defined benefit liability or asset. So that will be multiplied by the discount rate. तो आपको याद होगा 62 was nothing but 780 into 8%. Yes or no? In our question, 780 into 8% was 62. Sir, 780 क्या है? 780 was nothing but opening balance of obligation 4,200 minus opening balance of plan assets. So that comes to 780. Is it okay?
Yes, sir.
So general rule, what the standard says is net interest is equal to opening balance. Opening balance was 780 multiplied by discount rate. 8% was given. That comes to 62. So 62 was our case. On remeasurement as per para 99, this is if remeasurement happens during the period, then up to the date of, अब भाई ये तो मतलब accounting नहीं है, this is normal logic, okay? अगर remeasurement साल के बीच में हुआ, then up to the date of measurement, calculate on opening balance, and the balance period after remeasurement, you take it on the remeasured balances. Yes or no? हमारे क्वेश्चन में द रीमेजरमेंट इम्पैक्ट केम टुवर्ड्स द एंड ऑफ द पीरियड, तो उसका रीमेजरमेंट इंटरेस्ट विल हैपन इन द नेक्स्ट ईयर. डिड यू फॉलो?
Yes, sir.
Yes. So I mean, that is why, you know, when you read this theory first, you will be, अरे यार, this is so complicated, अपने को तो पल्ले ही नहीं पड़ रहे, we are not able to understand it. But when you do a question, it eases out a lot of things, and this is the logical, okay? And you will use the discount rate that is used for remeasurement. This is important because in this question, I used an 8% discount rate at the start of the period. Many times what will happen, the discount rate also can undergo a change as part of remeasurement. See, remeasurement happens because of change in actuarial assumptions. Actuarial assumptions are of two types. You remember, हमने किया था ना इसको. We had done this in one of the theories. Yes. Let me just check.
Demographic and finance.
Yes, demographic and financial assumptions. Yes. Demographic and financial assumptions. The financial assumptions mein discount rate is one of the assumptions. So if the discount rate has changed and because of which you have a remeasurement, the remeasurement will happen on the revised discount rate. Okay. Common sense. Again, I don't have to tell specifically कि आप यही rate लोगे, but nonetheless the standard has mentioned it, so I have also specified it. Okay, ठीक है. All right. So net interest on the asset is equal to interest cost on DBO, that is your expense, plus interest income on plan assets, that is your income, plus interest on the effect of the asset ceiling. Okay, asset ceiling पे भी interest आएगा. So that also included. All these three put together will be your net interest that will be presented in the P&L. Okay, all right. Now, remeasurement of net defined benefit liability or asset. What is it? So there are two paras which deal with, you don't have to remember the para numbers, but nonetheless. Determine current service cost using actuarial assumptions at the start of the annual reporting period. In our question, it was how much? 1.65 crore. This was given to me. Actuarial assumption वगैरह की बात हम किए ही नहीं थे उसमें additionally. Okay, so 165. Net defined benefit liability or asset is remeasured. So then if that is remeasured, then I will determine the current service cost for the remainder of the period. We will now do a question where the salary that I thought at the beginning of the plan is going to change in the subsequent period. Because of that, that is an actuarial remeasure. Salary change is not entirely on the control of the entity. Market scenarios also will determine the salary implications. So therefore, that becomes an actuarial assumptions. It is also mentioned in the standard that finance assumption pertaining to increased earnings is a actuarial assumption. Okay. So when that changes, then for the remaining period, you will use the revised actuarial assumptions. Okay. Applicable when, okay, so this is past service cost and all, ये हम question करके समझेंगे. Okay. Return on plan assets. What all does it include? It includes interest because you would have invested in government securities, dividends, you would have invested in some equity, and other income derived from plan assets, plus realized and unrealized gains or losses on the plan assets. Basically, आपका जो asset value है, whatever it has earned, realized or unrealized, all of that will come here. Minus, now, when you have put the money there, there will be a cost of managing these assets. What to buy, what to sell, when to sell, how to minimize my taxes on the sale. All of that is something which will come. And any tax payable by the plan itself. So when you put the money in a separate entity, that money is generating income. So the entity that is holding these investments will be subjected to income tax. So your return on plan assets is going to be all the incomes minus cost of managing plan assets minus tax payable by the plan itself to give you the total return on plan assets. Other admin costs are not deducted from return on plan assets. Okay, so that is a very simple explanation of what is the return on plan assets. Are we able to understand till now? Yes?
Yes.
Perfect. So that takes care of that question. Okay. All right. Fine. Come to question 9, page 8.82. This is your study module question. On 1st April opening, the fair value of assets is given 20 lakh 40. Present value of DBO 21 lakh 25. At the year end, the contribution received is 4 lakh 25,000. Paid out benefits 2 lakh 55,000. Current service cost for the financial year is 5 lakh 10,000. Interest rate of 5% is to be applied. This is your unwinding of discount. Fair value of plan asset 23 lakh 80 and present value of DBO closing is 27 lakh 20. Provide a reconciliation from opening balance to the closing balance. Show how much amount should be recognized in the P&L, OCI and the balance sheet. Is this something different from what we have done just now? बोलो. हमने अभी एक क्वेश्चन किया ना. Is it something different? Only one thing is different, which is payout. They have given some payout, right? Paid out benefits of 2,55,000. सिर्फ यही एक difference है. Now you tell me, benefits paid out, where is it going to appear?
So plan asset.
सोच के जवाब दो. Benefits paid out, where is it going to appear? Okay.
सर ऑब्लिगेशन को रिड्यूस करेगा.
Yes. आप दोनों के आंसर मिला दो. Monica said out of plan asset, Jeannie said out of obligation. Both of you are correct. तो दोनों जगह से less होगा because you are removing the plan asset, so asset value will come down. You are paying the obligation, so obligation also will go down. Is it okay? तो both
Yes, sir.
answers are
Yes,
correct.
sir.
Okay, तो एग्जाम में दोनों मिल के पेपर लिखो. Okay.
बस इंस्टीट्यूट अलाउ कर देगा क्या?
Yeah. So that is the, but yeah, both of you are right. So coming to the other part, if now just think about it. If I'm doing the presentation on a net basis, will I have benefits paid out appearing in the ledger? सपोज मैंने प्लान एसेट एंड DBO. I don't have separate GLs. I will make a single GL. Net DBO का एक सिंपल GL बनाता हूं. Will I have this benefit paid out appearing here? Answer is no. Because कैसे दिखाओगे? One side obligation goes down, one side asset goes down. Either you show debit credit of same value on both the sides, or you don't show it. It's one and the same. Okay, so treatment is one and the same. Okay, so that is how you are going to do this. So that is the only extra thing which is there. Apart from that, nothing is new in this question. So I will very freely give this to you for homework. Is it
Homework.
okay? Yes.
Yes, sir.
Great. See, my work is to give you the first explanation, whatever is new. After that, whatever is same, you will be doing it by yourself. If anything is different in that, I will explain it to you. Okay. Acha. Sahi hai. So this was an examination question also. The same thing it is. Okay. Don't know why it came 2 times. I should have written it there only. थोड़ा सा फिगर अलग है. 4,75,000, 2,65,000, 23,90, 27,20, 5-10 हजार का फर्क है. बट रिमेंबर दिस इज एन एग्जामिनेशन क्वेश्चन. सो करोगे 7 marks in your pocket. Okay. All right. So chalo, that is done. Now let us come to question number 13. That is an additional question. Okay. See, I have basically this particular standard. Most of the questions, if you see, they are direct. What I'm solving with you is not a direct part of the study module. Okay. I have tried to put in the questions, giving a gradual build up on the concept. Okay. So you are seeing similar pattern of questions and similar presentations, just so that you continue to remain familiar with the calculations that we are doing. So coming to this question, same वो रत्ना का ही चल रहा है अभी. Okay. So Ratna pays a lump sum benefit on termination of service equal to 1% of final salary. The salary in year 1 is 1 crore, assumed to increase at 7% per annum. Discount rate used is 10%. Show the build-up of the obligation in respect of an employee expected to leave at the end of year 5. We have done this calculation. Okay. If you look at the solution, you should remember these figures. 1 crore, end of 5 years, salary is 1.31 crores, cost of benefit 6,55,000, and this was the build up of the obligation, and this was the journal entry. So yahan tak to there is nothing new. This is exactly what we have done before. Is it okay? Are you able to recollect this particular calculation?
Yes, sir.
Now we come to the next one. During the second year, based on the performance of the employee, Ratna expects the last drawn salary of the employee to be 1.5 crores. Is this change in estimate or is it change in actuarial assumption?
Sir, change in estimate.
Anybody else?
Sir,
Bolo, go ahead. Go ahead. What is it?
assumption.
Assumptions. Yes. So this is demographic assumption, financial assumption, which forms a part of actuarial assumptions. So this is not merely a change in your regular assumption. This is something that is modifying your actuarial assumptions itself. See, when I talk about actuarial assumptions, remember one thing. This is something which is purely not in control of the entity. Okay. Future salary levels. Is it in control of the entity, or does a market also have an implication on that future salary levels?
Market indications.
Market का भी tomorrow you qualify, you go to the industry, you work for 1 year for one of the entities, you have already honed your skills, you are talented, you are qualified, तो आपको आपका सैलरी एंड वर्थ 1 साल के अंदर पता चल जाएगा. Yes, you will know what you are worth in the job market. Okay, people will tell you. It's not only you, people around will start telling you are worth much more. So that when you discuss with somebody, then that entity where you are working for, the immediate job that they will do is they'll try to match your compensation. Okay, they'll try to kind of match those compensation levels. So my point is, आपके salary levels में the company alone does not have the authority. The market also has an authority. Tomorrow, when you go for campus placements or whatever walk-in interviews, etc., you go with a certain expectation. You are not saying that मैं totally fresh हूँ, तो I don't know what I should demand. You very well know what you demand, because there is a trend in the market, and there is a trend at 5 years down the line. What an experienced chartered accountant like you can expect. 10 years down the line, what can you expect? So these expectations come from markets, and this is not in control of the entity. That is why it is put under actuarial assumptions. Okay. All right. Fine. So now let us look at the question. So now at the end of year 5, the salary expected to be 1.5 crores. So 7,50,000 will be the cost of your benefit. From 6,55,000, it became 7,50,000. So this is the build-up. Calculations are the same. I'm not going to go into detail. So per annum, 1,50,000 is the unit credit. Discounted to 10% using the 10% rate. So 1 lakh to 2 lakh 25. This will be your build up to 7,50,000. What is this 28,430? This is 225,394 minus 196,964, this figure, because under the original plan it was 1,96,000, but now it is 2,25,000. So 196,964. So 28,430. Is it a gain or a loss?
So increase in liability, so then loss.
It's a loss. Yes, it's a loss. Liability has increased from 1,96,000 to 2,25,000. So 28,430 is your loss. And this has happened in year 2. So in year 2, the entry that will be passed is interest cost 98,482. Sorry, yeah. Is it interest? No, that is current service cost. So employee benefit expense 98,482. Employee benefit expense being your finance cost is to 8,953. 28,430 is going to be your actuarial loss, which goes to the other comprehensive income. And credit will be provision for employee benefits. And from the third year onwards, these interests will be applicable. This current service cost will be applicable. Is it okay? Yes.
Yes, sir.
This is your interest. This is your current service cost, which applies. Okay. So that's perfect. Nothing else from this question. So this goes to your other comprehensive income. So that is question 30. All right. Now, coming to the next one. Okay. This is a one-off question. It has come in your RTP once. I am not sure if it is put in the study material. Okay. But this is the manner in which sometimes the institute calculates the discount rate. Okay. So at 1st April 2019, the fair value of plan assets was 10 lakhs. The plan paid benefits of 1 lakh 90 and received contributions of 4 lakh 90,000. The company computes the closing fair value of plan assets as 15 lakhs, that is on 31st March 2020, and the present value of the defined benefit obligation is 14 lakh 79,200 on the same date. Actuarial losses on the obligation were rupees 6,000. At 1st April 2019, the company made the following estimates based on the market prices at that date. Interest and dividend income after tax, 9.25%. Realized and unrealized gains on plan assets, 2%. Administration costs, -1%. So expected rate of return is 10.25. Determine the actual return, the expected return, and also compute the amounts to be recognized in other comprehensive income in this case. Okay, so this is the question that is there. Now, largely, most of the cases, okay, in fact, I don't recollect, this has come in an RTP, but in almost all the questions, even in examinations, they give you the discount rate. They give you the discount rate. You are not required to do this calculation. But in this question, as an exception, it has come. So that is why I have put this question here. Okay. So now let us look at how the institute calculates. Okay. कहाँ से शुरू करें? Okay. There are a couple of assumptions that the institute makes. Okay, let us. This is which question? Question 14, I think. Assumptions. Have I mentioned it here? Yeah, it's there already. There are certain assumptions which the institute makes. One, interest rate given is always effective interest rate. And these are reasonably logical assumptions. Okay. Is always effective interest rate, which is 10.25%. Compounding happens half yearly. And finally, any contribution paid into or benefit paid from the plan will always be in the middle of the year. See, when the dates are not given, typically it's reasonable to assume that whatever payout and contribution happens, that happens in the middle. And that is why they assume that compounding happens half yearly. Okay. ये reasonable है assume करना when you get a question that requires you to calculate the rate of interest. Otherwise, what we assume happens towards the end of the year, you can take that and do the question. There is no harm in that as well. Okay. To convert, okay. So now the annual rate of 10.25%, I need to convert it to 6-month interest rate. I need to convert it to 6 months interest rate. So that is equal to 1 plus, the formula is given, 10.25% raised to 6 by 12 minus 1. So when you do this, it comes to 5%. What is 5%? This is the compounding rate for 6 months. 10.25% is your annual rate. 10.25% is your annual rate. So your compounding rate for the 6 monthly period is 5 months. 5 months, first 6 months. You add the total and then on that you do the 5%. So on an overall annual basis, it comes to 10.25%. Are you able to understand this? Yes. Are you able to follow? Yes, it is like saying there is a loan of 100 rupees. First 6 months, I do the compounding. I do the interest, 105. Then there will be another interest block. This is at 5%. Then another interest working, 5% compounding. So 110.25. So therefore, when I look at the start and the end, my annual rate comes to 10.25%, which is okay, which is fair enough. So 10.25% becomes your effective annual interest rate. Okay, now let us start. Question में कुछ है नहीं वैसे. Okay, what it is saying is you have opening balance of 10 lakhs. Plan has paid benefits of 3 lakhs of 4 lakh, sorry, 1 lakh 90 and received contributions of 4 lakh 90. So therefore, opening value of 10 lakhs, was it invested for the entire year? Yes or no? Yes, it's invested for the entire year. So therefore, 10 lakh into 10.25% effective interest rate, 1,02,500. Are we okay with this? Yes. 1,02,500. Additionally, during the year, I paid 1,90,000 and I received 4,90,000. So my net inflows into the plan asset is 3 lakhs. Am I okay with this? Since the dates are not given, I am assuming both of them to happen in the middle of the year. That means 6 months. So therefore, your return is 3 lakhs for 6 months at normal rate of 10%. So 3 lakhs into 10% into 6 by 12, 15,000. So expected return on plan assets is 1,17,500. Expected return bolo, or this is your interest cost. This is your interest cost. Interest income, sorry, not cost. Okay. All clear? Hemant, is it clear? Vignesh, is it clear? Yes, Jeannie has confirmed. Monica, hope it's clear.
Yes, sir.
Yes. So my interest income जो मैं expect कर रहा हूँ, that is 1,17,500. Coming to the next one, actual return on plan assets. Opening value is 15 lakhs. Sorry, this is the closing value, 15 lakhs. Okay. All right. मुझे ये statement नहीं समझ में आता है. Okay. I am a debit credit person. Okay. So closing balance is 15 lakhs. Opening balance is 10 lakhs. 4 lakh 90, 1 lakh 90 is your contributions received and contributions and paid outs from the fund. So the net actual return is 2 lakhs. Is it okay? Net actual return is 2 lakhs. Are you convinced about this 2 lakhs? Yes. Jeannie, Hemant. Okay. All right. Now, this 2 lakhs is split into two things. 1,17,500 and balance is 82,500. 1,17,500 becomes your interest, which is nothing but expected return. 82,500 is your actuarial gain on plan assets. Actuarial gain on plan assets. Are we able to understand? Yes. Sure. Hemant, did you follow? Monica?
Yes, sir.
Yeah. So therefore, this becomes your 2 lakh minus 1,17,500. 82,500 is your actuarial gain. And if you look at the question, there is an actuarial loss on the obligation of 6,000. So I will net it off. So minus 6,000. So net actuarial gain to be recognized is 76,500. 76,500. Did we understand? Yes.
यस सर।
All
सर
right. हाँ
इसमें
बोलिए।
इंटरेस्ट रेट दे रखी है 9.25।
10.25।
सर 9.25 शेड्यूल देखिए
अच्छा ये वाली, ओके 9.25, दैट्स राइट। यस।
सर हमने वो क्यों नहीं लिया जब हम डिविडेंड इंटरेस्ट का कैलकुलेशन कर रहे थे?
ओके, तो यू कम टू द थियरी। Return on plan assets. What all is included? Interest,
ओके सर,
dividends, and
गॉट
other
इट।
income. समझ में आ गया?
यस सर।
So that is why we take 10.25. Okay, all right. So that is the reason for importance of these type of questions. See, if this question was not there, then all of us would take 9.25. But we need to understand that the plan is not only earning interest, it also has its own expenses. So therefore, we will take gains, unrealized administration cost deduct karenge and come to the expected rate of return. Okay. So that closes question number 14 as well. All right. Okay. So now we take a break of 10 minutes. Okay. And then we shall continue. I'm on the last question, which is a very, very good question. It covers your settlements. It covers your, I think some curtailments, redundancies, everything is there. Okay. And once I do this, we are done with the standard. Then जो भी missing links है ना, जो ये slide नहीं पढ़े, वो slide नहीं पढ़े, that will end with this question that we solve. It will take a fairly long amount of time, at least 15-20 minutes, to discuss this question in totality. Then those slides, and then we are done for the day. Okay, so that's why take a 10 minute. Yes,
स्टैंडर्ड ओवर।
standard is over. Yes. What else is there in the standard? See, I'm on slide number 66, 67. Then this defined benefit plan disclosures are there. Other long-term benefits and termination benefits. ये दो benefits है। इसका आप accounting देखोगे ना, it is like you have done the entire heart of the standard. ये दो standard में रखा ही क्या? I mean these two benefits, I'll do it with you, but it takes me 5 minutes to explain both of them together. कुछ है ही नहीं उसमें. Okay. So the main important thing is what I'm going to explain right now. Okay. Class will go as scheduled till 10. उसमें कोई वो नहीं है. But only thing is the major part we are almost through with the standard. Okay. All right. Fine. So see you after 10 minutes. ठीक है? Yes. 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 चलो. Bye bye. See you 10 minutes. Okay, so let's continue the next very important question. And after that, let's see. Okay, all right. So question 15. This is similar to question 8, which is there in your study material, test your knowledge. And it is also similar to your RTP question of November 2023. Okay, so quite a similar question. So only the figures would have changed is what I get it. All right. So now with that, let us start reading the question and let us understand the requirements. Okay. Arunachalam operates a defined retirement benefit plan for its current and former employees. Given the large size of the organization, it engaged a firm of actuaries for advice on the contribution levels and overall liabilities of the plan to pay the benefits. The following details are presented. On 1st April 2019, the actuarial valuation of the present value of defined obligation was 15 crores. On the same date, the fair value of the assets of the defined benefit plan was 13 crores. So this is assets was 13 crores. So there is a net opening deficit of 2 crores. On 1st April 2019, the annual market yield on government bonds was 5%. Why they have given this? This will be your discount rate. Okay. So this is your opening balances. During the year ended 31st March 2020, Arunachalam Limited made contributions of 1.75 crores into the plan. And the plan paid out benefits of 1.05 crores to retired members. Assume that both these payments were made on 31st March 2020. Okay. The current service cost for the year was estimated as 1.55 crores. On 28th February 2020, the rules of the plan were amended with retrospective effect, which led to an increase in the present value of the defined benefit obligation by 37.5 lakhs from that date. So what is this? Plan amendment, giving rise to past service cost. Are we able to understand? Yes. So far, any doubts in the question? Hemant, Jeannie?
No, sir.
No doubts. Monica also confirmed. Great. Okay. All right. Next. During the year ended 31st March 2020, Arunachalam was in negotiation with employee representatives regarding planned redundancies. These negotiations were completed shortly before the year end and the redundancy packages were agreed. The impact of these redundancies was to reduce the PV of the defined benefit obligation by 2 crores. So impact was to reduce the present value of the DBO by 2 crores. Before 31st March 2020, Arunachalam made payments of 1.875 crores to the affected employees in compensation for a curtailment of their benefits. And these were made out of the assets of the retirement benefits plan. On 31st March 2020, the present value of the DBO was 17 crores. This is the closing balance. And the fair value of the assets was 14 crores. How will these items be accounted in the books of Arunachalam Limited and also give extracts of financial statements due to the above transactions? Okay, fine. So with that, let us start. Yes, question is clear. No doubts on the question. All right. So a very interesting question. Okay, so let us start. What all is given to us? Okay. I can either do it in the statement form. I have presented here DBO and plan assets, or I can do it in the account form. I will take the account form in the beginning because that is easy for us to understand. That is easy for us to understand. Okay, all right. First one, we will do the obligation side first. Okay. Obligation ही है ना? Yes, we will do the obligation side first. On 1st April, present value of obligation was 15 crores. So opening balance brought forward 15 crores. Is it okay? Yes. Acha. On 1st April, the annual market yield on the bonds was 5%. The annual market yield was 5%. And somewhere they have paid, told current service cost was estimated as 1.55 crores. Okay. So now your current service cost is 1.55 crores. Are we okay with this so far? Current service cost increases the obligation, so credit. Next, 5% is the rate of yield. So 5% means 15 crores into 5%. So that comes to 75 lakhs. So 75 lakhs. Are we okay with this so far, these three items?
Yes, sir.
Okay, ठीक है. तो मेरा ये मैंने ले लिया. I took this calculation and I have taken this figure also. Now what is happening? During the year, Arunachalam made contributions of 1.75 crores into the plan. Will this hit my defined benefit obligation account? Think and answer. Okay, Hemant has given an answer. What about girls?
Sir, please repeat your question.
This one, ये जो figure है, made contributions of 1.75 crores into the plan. Will it affect the defined benefit obligations account? That's right, Hemant. But what about, bolo.
Increase the liabilities.
Increase in liability or increase in asset?
Increase in, sir, 1 point, increase in asset, sorry.
Increase in asset. So this will be my plan assets. अभी हम obligation कर रहे हैं, so this will not hit. What increases your obligation is current service cost, जो already हम लोग ले चुके हैं. So this is not going to hit my plan, what you call my plan. Sorry, it won't hit my obligation. It will only hit my plan assets. And the plan paid out benefits of 1.05 crores to the members. Will this come in my obligation account?
Yes, sir.
Yes, this will come. This will come in both the places. Obligation bhi aayega and it will come in the plan assets also. Okay. So benefits paid 1.05 crores. Is it okay till now? Yes. All right. So ये हो गया हमारा benefit. On 28th February, the rules of the plan were amended with retrospective effect, which led to an increase in the present value of the defined benefit obligation by 37.5 lakhs from that date. What do I do with this 37.5 lakhs? Just tell me the journal entry. Rules were amended. बोलिए.
Service cost to DBO.
That's right. Past service cost, which is essentially employee benefit expenses to defined benefit obligation. Yes. Jeannie, are you able to follow?
Yes, sir.
Yes. So this will hit the P&L and increase the obligation. So if you look at the presentation, past service cost 37 lakh 50,000. Any doubt so far? No doubts. Okay. So then let us proceed further. During the year, Arunachalam was in negotiation with the employee representatives regarding planned redundancies. Okay, so there is excess workforce, so they want to cut short the staff. These negotiations were completed shortly before the year end, and the redundancy packages were agreed. The impact of these redundancies was to reduce the present value of obligation by 2 crores. Are you able to understand? Ultimately, हो क्या रहा है यहाँ पे? The present value of the defined benefit obligation is going to go down by 2 crores. Are you convinced? Yes.
Yes, sir.
So therefore, what will happen? My past service cost, sorry, not past service cost, इसको चेंज करना पड़ेगा वर्डिंग्स. गेन ऑन सेटलमेंट नहीं है. दिस विल बी curtailment and settlement. Are you okay? Curtailment. See, what is curtailment? Curtailing means reducing the rights on the payouts. Okay, now if I have a defined benefit plan, who has right on these plans? The employees, correct? Now, if my employees are resigning or I am making them to leave the job, that means I am effectively reducing their rights on these plans. So therefore, I am curtailing their rights. तो उसको हम लोग बोलते हैं curtailment. But if I curtail their rights, I have to offer them something. Yes or no? बोलो.
Yes, sir.
Yes, sir.
That is why we call it as curtailment and settlement. Okay. So as part of curtailment and settlement, I am paying them some amount. The impact of that payment is reducing my fair value by 2 crore rupees. Is it okay? So therefore, I have reduced the fair value of my obligation by 2 crores. Any doubt so far?
No, sir.
You are thinking, sir, but payment 1.875 crores हो रहा है. I think you are reading this one, right? You are reading the next sentence also. Correct? Arunachalam made payments of 1.875 crores. We'll come to that. We'll come to that. Okay. But Filhal, are you convinced on all these items? Yes?
Yes, sir.
Right now, there is no doubt. Then you are having the closing balance. What is my closing balance? 17 crores. So therefore, this will be your actuarial loss. Sir, why actuarial loss? Because already interest cost is computed. So this will be your net actuarial loss. Shall we proceed further? Yes. Monica, समझ में आ गया?
Yes, sir.
Okay. Jeannie also has understood. Hope Vignesh has understood. Usha, Hemant, Monica. So Monica confirmed. Niranjan. Hope all of them have confirmed. Okay. All right. Coming to the next one, plan assets. Okay. Plan assets. All right. Now, plan assets, what is your opening balance? 13 crores. So opening balance, 13 crores. Benefits paid 1.05 crores. Okay, 1.05 crores. That is given somewhere here only. Okay, benefits paid 1.05 crores. Additionally, made contributions of 1.75 crores. So contributions increase, so debit to the plan assets 1.75 crores. And the discount rate is 5%. So expected return is going to be how much? 13 crores into 5%. So 65 lakhs, which is this value. Okay. And finally, this is all done. I have taken opening balance I have taken benefits paid. I have taken the 5% yield. That's about it. Coming to the next one. Coming to the next one. The fair value of the defined benefit plan assets is 14 crores. Okay. And finally, Arunachalam made a payment of 1.875 crores to the employees affected by the redundancies in compensation. So I have actually made a payment of 1.875 crores to the employees. So far, is it okay? Yes. Monica, clear? Jeannie has confirmed. Usha, Vignesh, Niranjan, Hemant. Did you follow till now? Or is there any loose end which you want me to explain?
सर लास्ट वाला कौन सा वापस रिपीट कर दीजिए, मेरे यहाँ पे नेटवर्क का इशू था.
अच्छा.
Recording stopped.
1 minute.
Recording in progress.
Okay. Okay. I think some technical issue. Okay. So, last में क्या हुआ? Opening 13 crores, benefits paid 1.05, contribution during the period 1.75, closing balance 14 crores, interest income 65 crores. Last point, what have they given? Arunachalam made payments of 1.875 crores to the employees affected by the redundancies. These payments were made out of the assets of the retirement benefits plan. So this is also a payout. So the entry will be crediting to the plan assets account 1.875 crores. So Hemant, hope you understood. Monica, hope you understood.
Yes sir.
Okay, ठीक है. तो इसके बाद मेरा एक्चुअरियल गेन नेट आ गया 1.525 crores. ओके सर, ये तो हो गया बैलेंस शीट आइटम्स, बिकॉज PV of DBO is also a balance sheet item and plan assets also is a balance sheet item. Now we come to the extracts of the P&L. P&L में what all will go? You will tell me. Current service cost, yes or no? Yes?
Yes, sir.
Yes sir.
So 1.55 crores. Interest cost will come to the P&L and interest income also will come to the P&L. So you will see
Yes, sir.
75 lakhs expense and 65 lakhs income. Yes?
Yes sir.
And past service cost of 37 lakh 50 will also come in as an expense. So yahan tak everything is clear. Okay. Now look at this curtailment and settlement. I had these employees who I have, terminated their jobs. Okay. There has been a redundancy, planned redundancies reduction, and therefore I have reduced their jobs. So we have removed their entitlement to these benefits. What is happening is liability is going down by 2 crores. Okay. But payout is only 1.875 crores. Are you able to follow? Means to settle an obligation of 2 crores, I have made a payment of only 1.875 crores. Are you able to understand?
Yes, sir.
That means I am having a gain on this settlement. Yes, my liability went down by 2, but the actual payment was only 1.875 crores. And therefore, there is a gain on settlement of 0.125 crores. Are you able to understand this?
Yes, sir.
Hemant, did you follow? So 2 minus 1.875 gives you 0.125. So that will come as a gain on settlement. That will come as a gain on settlement. Anybody has any doubts here? No doubts? So therefore, when you do the add less, the net employee benefit cost that you will be booking is 1.9 crores. 1.9 crores. Okay, so that takes care of net cost. Coming to your actuarial gains and losses. Your actuarial loss on the obligation is 2.37 crores. On the plan assets, it is a gain of 1.52 crores. And therefore, the net actuarial loss is 85 lakhs. Any doubts here? Yes, no doubts? Clear. Monica, clear? Hemant, clear?
Yes, sir.
Such Pooja has not come. Vignesh, clear? Usha, Niranjan, all clear. Okay, fine. So 1.53 crores. So this is done, this is done, this is done. Okay. 85 lakhs. And extract of cash bank, ये नहीं देना होता तो भी चलता. 1.75 crores is what is your payout. What is your payout? Okay, all right. So this is in the statement form. From opening obligation till closing obligation, whatever movements have happened is what is presented. Similarly, plan assets, opening value to closing value, whatever has happened is given. Is it okay? And what is hitting the P&L? 1.9 crores, same like this figure. Net amount in the financial statements, opening is a net benefit liability of 2 crores, closing is a net benefit liability of 3 crores. So that is done, this is done, this is also done. Yes, anything troubling us or anything that has created a problem for us in this question? No, Jeannie has confirmed. Monica, did you understand?
Yes, sir.
हेमंत समझ में आ गया? Vignesh confirm. Answer in account form is perfectly fine, but don't forget, I have given to you. Presentation should be as one net figure. Okay? So don't forget that. See, your subject is not accounting. Accounting you left way back in intermediate. Okay? This is reporting. So what is of importance is not passing these journal entries or preparing these accounts. What is important is how are you going to show in the financial statements. So you will be net presenting them. You will be netting them off and presenting. That is why net defined benefit liability, total impact to P&L, net impact to other comprehensive income. Why do I do this netting off? Only to show that they are all netted off together. You have so many transactions, but ultimately you are netting it off and presenting in the financials. Okay, so that is what is important for us.
सर
Yes.
कर्टेलमेंट और सेटलमेंट जो है वो कैश में होगा ना?
कौन सा?
कर्टेलमेंट एंड सेटलमेंट.
हाँ, तो 1.875 करोड़ का पेमेंट कर दिया ना हमने.
सर जो बैंक का नीचे दिखाया ट्रांजेक्शन वो 1.75 पे दिखाया है.
हाँ, ये 1.75 curtailment settlement का नहीं है. This is of the contribution that is done.
आई नो सर, बट इसको भी दिखाना चाहिए था ना 18 मतलब
नहीं,
1875.
ये देखिए 1.875 करोड़ क्या होगा. यू हैव ऑलरेडी पैसा पड़ा हुआ है आपके एसेट्स में. वो पैसा आप निकालोगे एंड आउट ऑफ द प्लान एसेट्स अकाउंट ओनली दैट गोज टू द एम्प्लॉय.
ओके सर. ओके
तो
सर.
हमारे कैश बैंक को हिट नहीं करेगा. इवन इफ इट इज हिटिंग माय कैश बैंक, वो पैसा आएगा एंड जाएगा. दैट्स इट. सो इट विल कम ऑन बोथ डेबिट एंड क्रेडिट. 1.875 डेबिट टू द एंटिटीज बैंक एंड देन पे आउट.
ओके सर.
Okay. So what we have to understand is my investments, we have to view them as a separate entity altogether. Then the whole process becomes very simple. Then the whole process becomes very simple to understand. Okay. So that takes care of your post-employment benefits. Now let us come to some of the theories that we had skipped. Okay. All right. So this question is done. Okay. I'll just come. Give me a minute. Okay. Yes. So coming to gains and losses on settlement. All right. So what do we understand by settlement? Settlement is a transaction which eliminates all further legal or constructive obligations for part or all of the benefits provided under the defined benefit plans. In the question that we saw, those employees for whom the redundancies were planned, their obligations that the entity had towards them, that 2 crore reduction has eliminated all the legal or constructive obligations. So usko hum log bolte hain settlement. Are you able to follow? And it is basically a payment of benefits to or on behalf of employees as per the plan. And this is included in your actuarial assumptions. Are you able to follow? Yes. So
Yes.
old plan, if it is replaced by a new plan with benefits same in substance, खाली नाम बदल दिया, but overall it's the same plan, then in effect it is not a settlement. Okay, so many times what entities will do is they will show to settle an old plan, थोड़ा सा P&L में credit आएगा, and then they will put a new plan in place with almost similar benefits. You saw in this particular question, there has been a 12,50,000 gain to the P&L. Yes. So like this, if entities go for settlement, ये तो खाली book का presentation है. Yes. Because neither is money going out from the organization, it's going out from those plan assets. That's not impacting my cash flows right now. And it is also reducing my obligation. And in the next financial year, I create another plan with effectively the same things. So when that is the scenario, then we don't call it as a settlement. Okay. So when I say a plan has terminated, when the obligation is settled and the plan ceases to exist, What is the gain or loss on settlement? Gain or loss on settlement is nothing but present value of defined benefit obligations being settled. In our case, how much it was? Bolo.
187.
नहीं, ये
Right.
PV of obligation settled
Defined
2 crores. हमारे question में it was 2 crores. Minus settlement price including plan assets transferred. तो ये कितना था हमारे question में?
187,500.
1.875 crores. Okay. So this difference, we have recognized it as a gain or loss on settlement in the P&L. Okay, so plan amendment plus curtailment plus settlement. When any of the above occurs, either amendment or curtailment or settlement. In that question, all the three happened. There was a plan amendment also, because of which there came a past service cost. There was a curtailment and settlement also. So recognize and measure any past service cost or gains or loss on settlement without considering effect of asset ceiling. So straight away you record it. After the plan curtailment, amendment or settlement, determine the effect of asset ceiling and recognize any change in that regard. Okay, so that is what you are going to do. Okay, so that takes care of gains and losses on settlement. Do you think we have covered everything, all the theory matters? Yes. I think I have not left anything for theory, only for you to read. Okay. More or less सब कुछ cover कर लिया, सबके questions भी हम cover कर चुके हैं. Okay. All right. You want asset ceiling with reference to amendment or settlement, Hemant, or in general about asset ceiling? In general. Okay. So what is asset ceiling? So asset ceiling is essentially the maximum amount that you can realize from the plan assets. The maximum amount that you can realize from your plan assets. Okay. Basically, I have on one side present value of defined benefit obligations. On the other side, I have the plan assets, the fair value of plan assets. So when I subtract it, I get the net defined benefit obligations. If there is a surplus, it will be a net defined benefit asset. Now, this net asset, which I have to present in the balance sheet, I just cannot subtract and present. I have to look at the economic benefits that will come out of the plan. Now, what will be these economic benefits? Either refund of the plan, because I have paid more, how much I will get back, or in the form of reduced contributions in the future. So the amount of this is known to be my asset ceiling, because this is my direct benefit from the plan as an entity. तो उसको हम लोग बोलते हैं asset ceiling. So your net defined benefit asset will be restricted to the amount of asset ceiling. You cannot show any amount, whatever you want. You have to restrict it to the asset ceiling. Okay, so that is your queries. Okay, all right. Next. So that is done. All these questions are done for you. Okay. All right. From the following particulars, compute the net defined benefit liability and expense. Look at this and then tell me whether you can do on your own. You are required to compute net liability and expense, opening balance, current service cost, interest cost, change in demographic and financial assumptions, experience variation, benefits paid, investment income, employer contribution, return on plan assets. Is there anything that is new or not familiar or something which you cannot do in this? Yes. No. भाई सब कुछ हमने कर रखा है. So you can freely try this for homework. You can freely. Monica, yes?
Yes, sir.
All right. Hemant, try this for homework. Okay? All right. Fine. Defined benefit plan, rights to reimbursement. You can recognize an asset only when it is virtually certain that another party will reimburse the expenditure required to settle the defined benefit obligation. You will recognize the right to reimbursement as a separate asset measured at fair value. So like for example, you have set up your plant in a backward area and you have given employment to the local persons there, for which you have a defined benefit plan that is set up. And against the plan that you have set up, the government has said, we will support you by giving you, say, 40% of the plan. We will reimburse you. So that reimbursement right will be recognized as a separate asset at fair value. Okay. Disaggregate and recognize the same changes in fair value as change in fair value of plan assets. Okay. Insurance policy, qualifying insurance policy, book it as a plan asset, not considered as a reimbursement right. And if it is not a qualifying policy, then it is not a plan asset, but treat it as a reimbursement right. Treatment qualifying policy, you will net it off against obligation to give net DPO. In the case of non-qualifying policy, show the policy as a separate asset, obligation as a separate liability. कुछ नहीं है. These disclosures you can go through this. कुछ खास है नहीं इसमें. Okay. It's just theory, what all you need to disclose. That's it. Okay. With this, we come to the end of post-employment benefits. Any doubts in post-employment benefits, anyone? Yes? Monica, Jeannie, no doubts? Okay. No. All right. Monica, confirm? Yes?
Yes,
Hemant?
sir.
Hemant, koi doubts? Vignesh, any doubts? No doubts. Okay. So as I mentioned, this is the only part that takes a lot of time to discuss. Now the remaining ones are very simple, because when I talk about other long-term employee benefits, this is not related to his benefits which will be paid after employment, but this will be something like a long-term benefit, long-term paid absences, jubilee benefits, long-term disability benefits, profit sharing and bonuses, or deferred remuneration. Okay. So what happens is same thing. Here you have deficit or surplus if you are creating a plan. Reimbursement, right? What we studied, same thing applies. Recognition and P&L, in P&L and asset, same as what we discussed. Service cost, net interest on net defined benefit liability plus remeasurements. So everything is exactly, I told you, once one thing is over, the remaining is very simple. Any doubts here? Yes? Any doubts? Measurement of obligation reflects probability that payment is required, as well as the length of time for which the payment is expected to be made. Okay. Any doubts? No doubts. So कुछ change नहीं है. Let us look at a question. See, in your institute's material, I don't think you will have a question on what you say. You will not have a question on long-term employee benefits. Okay. I'm just seeing the study module, whether anything has come newly, but no, there is no new question as such. Okay. Post-employment, 100 employees, इसका तो देखा हमने. Increase the pension, operates at defined benefit, retirements, defined benefit, obligation, plan assets. Yeah, there is no question. Okay. ठीक है, that's okay. That's fine. Concepts are the same, so you don't really have to do anything. Indrayani Limited wants to motivate its sales personnel by way of an additional bonus. According to the HR policy, the sales personnel would receive bonus at the 10th anniversary of their service amounting to 1 time of their current monthly salary. तो एक महीने का salary देंगे for the 10th anniversary. In 1920, Indrayani's management decided to increase this to 3 times of the current monthly salaries. Indrayani makes regular contributions to the fund for covering payments on this bonus. Based on the information given below, advise how to present the employee benefit liability in the financial statements of 31st March 2020. Is it okay? Yeah. तो क्या दिया है अपने को? Present value of obligation, opening and closing. Fair value of plan assets, opening and closing. Interest cost is given. Interest income is given. Current service cost, past service cost, contribution to plan assets, return on plan assets, less interest income, benefits paid to salesmen, and actuarial gain on the liability. Is it okay? Go through this question once, then we will do the answering. So where are you guys from? हेमंत कहाँ से हो आप? What about Jeannie? What about Monica?
Sir, I'm from Ahmedabad, Gujarat.
Oh, अच्छा. Okay, okay, okay. And Monica?
सर गुड़गांव।
अच्छा, oh, अच्छा. And oh, अच्छा. Vignesh from Tamil Nadu. Okay, and Hemant from Bangalore. Good, 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 good. Okay, that's nice. So we have Bangalore, Tamil Nadu, Kumbakonam, Gurgaon, and Ahmedabad. Okay, good. ठीक है. All right. So you went through the question. Anything very different you find? Any different terms or any different usage? कुछ नहीं है. वही चीज है. It's exactly the same. There is nothing different in this. Okay. So now let us look at the thing that is there. Okay. One. We start with the movements. I think we can manage without the ledger accounts now. Let us try doing without the ledgers. So, obligation opening value 7,200. Obligation closing value 22,050. Interest cost 360. Interest cost 360. That is getting added. Current service cost 1,935. Benefits paid to sales personnel is a reduction, so 1,350 reduced. Past service cost 13,995 is hitting. So actuarial gain on the liability will be minus 90. So gain means it's a positive thing. So that is why 90. Are you okay with this so far? Yes.
Yes, sir.
All right. Coming to the plan assets, opening value 6,750, closing value 16,605. इंटरेस्ट इनकम ऑन प्लान एसेट्स दिया है क्या आपने को? यस, 338. कंट्रीब्यूशंस 10,800. एक्चुअल गेन ऑलरेडी दिया हुआ है. Benefits paid to employees will come here also, 1,350, because that will go from the plan assets and return less interest income. This is again due to actuarial assumption, so 68. So that takes care of that part. Okay, all right. Next, presentation in financials. What are you going to do? 7,200 obligation, 6,750 asset. So 450 will be the net. And next year, closing balance 22,050, 16,605. So 22,050, 16,605 minus 5,445. What will go in the P&L? What will go in the P&L? Current service cost, past service cost, interest cost, interest income. Yes. Current service cost, interest cost, past service cost, interest income on plan assets. Yes. And that's about it. Then these two items, actuarial gain will go to OCI and return on plan assets less interest income will go to OCI. So that's about it. All right. Any doubts so far? Any doubts so far? I'll come to your query, Him. Okay. I'll come to your query. Okay. 90 and 68 goes to OCI. So adjustment entry, employee benefit expenses debit, take the total of the items in the P&L. Other comprehensive income debit, take the total of items appearing in other comprehensive income. Credit net defined benefit liability. So 15,795. Debit liabilities 10,800. Credit cash. What is this 10,800? This 10,800 is nothing but the contributions. This is the contribution. Okay. Now, verification of movement in the net total. Opening is given, this is given, actuarial gain is calculated, contribution. So net comes to 5,445, which is exactly matching these values. Any doubts so far? Have I
No,
been
sir.
too fast? Have I been too slow? You have been unable to follow or anything? I hope no such thing is there. Okay. So that completes other long-term benefits. Okay, this question 16 is done. And last part, termination benefits. Okay, what do you mean by termination benefits? आपने employee को निकाल दिया, then you are liable to compensate him for that. You are liable to compensate him for that. So employee benefits are payable as a result of either employee's decision to accept an offer of benefits in exchange for termination of the employment or entity's decision to terminate before the normal retirement. So when to recognize? Date when entity recognizes cost for restructuring, which involves payment of termination benefits, or date when entity can no longer withdraw the benefits offered, earlier of these two dates. When can the entity no longer withdraw? Employee decision, earlier of employee accepts the offer or restriction to withdraw the offer takes effect. No specific disclosures, entity's decision, this is what is the criteria. Okay, nothing is there to explain as such in this. Okay, it's just a common logical sense that is there. How do I measure? If it is enhancement to post-employment benefit, treat it as post-employment benefits. If it is expected to be settled within 12 months, short term. If it is not wholly settled within 12 months, as other long-term employee benefits. Any doubt so far? Termination benefits. Best thing, we'll do a question, and with that, let us close the standard. Okay? All right. दो appendices है, that is just theory. So let us see after we close. Okay. All right. After assessing the impact of the COVID-19 pandemic, which adversely affected its operations since Jan 2020, Enjoy Travel Limited decided to shut down one of its divisions towards the end of 1920 and published a detailed formal plan of closure along with redundancies of employees and termination of their employment. The details of the plan are as follows. Enjoy Travel expects the commencement of closure in 2021 and completing the full closure of the division by the end of 21-22. Enjoy Travel offers to pay 13 lakh 50 to each employee leaving the company before the closure. As Enjoy Travel needs qualified employees to perform the closure, total benefit of 2250 is promised to all employees staying in the company until the closure is completed. Total employees affected by the closure is 400. Enjoy Travel assumes that 100 of them leaves before the closure and 300 stays until the closure. How will the company recognize and measure termination benefits at March 2020 and 21? Applicable discount rate is 5%. Yes, so go through this question. Yes, and then let us start calculating. Take your time, go through this question. Did you go through the question? Yes? All right. So let us start solving it. Okay. There are two categories of employees in this question. One is employees who are staying till the end of the closure. And the other is employee leaving the company before the closure. Could you make out that difference? Yes.
Yes, sir.
So therefore, what is the company doing? Understand this, you will be able to understand what I'm trying to reach out. 13,50,000. What is this? 13,50,000. It is given to each employee leaving the company before the closure. Yes? Yes or no?
Yes, sir.
So because of the termination that is happening, 13,50,000 into 400 is equal to 5,400 lakhs. Yes, this is the amount that is going to be paid. Yes, this is the benefit in exchange of termination. This is the benefit in exchange of termination. यहाँ तक समझा आपने को? Yes. Now,
Yes.
there are 300 employees, 300, right? 100 leaves before the closure and 300 leaves and after the closure. So these 300 employees are getting how much? These 300 employees are getting 22,50,000 rupees. Are you able to follow?
Yes, sir.
यहाँ दिया है ना 22,50,000 promised to all employees staying until the closure is completed. So therefore, they are getting 9 lakhs extra. Are you able to follow?
Yes, sir.
That 9 lakhs, is it a termination benefit or a service benefit?
सर्विस बेनिफिट
सर्विस बेनिफिट
सर्विस बेनिफिट बिकॉज वो रह के क्लोजर में असिस्ट कर रहे हैं 13,50,000 going to everybody as part of termination benefit, but these 300 employees are staying and doing the work for closing. क्या काम करेंगे? Sale of assets, whatever is there. Okay. Negotiating with the customers. Okay. Negotiating with the people on closing out all the travel related formalities. Okay. जो भी लेना देना है, closing the bank accounts, doing all your corporate filings. So basically they are rendering services for which they are getting a compensation of 9 lakh rupees. So it will come to 9 lakhs into 300. So 2,700 lakhs. Is it okay? Yes. So my termination benefit is 5,400 lakhs. My service benefit is 2,700 lakhs. Are you able to follow? Yes.
Yes, sir.
So that is the first step in this question. Whenever a question comes on termination benefits, you need to identify what is the actual termination benefit. So 5,400, 2,700, 8,100 is the total amount that we are paying. Now, if I look at termination benefits, 100 employees are getting the payment immediately because they are not staying till the closure gets over. Yes or no?
Yes, sir.
देखो 400 में से 300 लोग रहेंगे to complete the closure. Out of 400, 300 people will remain to complete the closure. That means 100 people are not there to complete the closure. That means 100 people's payout happens immediately because they are getting terminated immediately. So therefore, 100 employees into 13,50,000, 1,350 lakhs is the payment that has to happen within 12 months. Any doubts here?
नो सर।
No.
No. The remaining 300 employees, I will be paying them 1 year down the line after they complete the closure. After they complete the closure. समझ में आ गया? Yes. So that will be 300 into 13 lakh 50 divided by 1.08. 8% is the discounting factor. Payment happens after 1 year. That means bring it to the present value. So 3,750. Are we okay with this? Yes.
Yes, sir.
Divided by 1.08. That is what is mentioned. Monica confirmed. Jeannie?
यस सर।
ठीक है, चलिए, that's good. So 3,000. Vignesh, hope you understood. Yes, Usha, hope you understood. Hemant has confirmed any case. Okay. Now, benefits in exchange of service. 300 employees are working for 2 years, current year and next year. Yes, for which they are getting paid how much? 9 lakh rupees. So 9 lakh into 300, so 2,700 divided by 2. So attributed benefit to each year is 1,350. Is it okay here till now?
यस सर।
All right. Now, this build up is what we are going to calculate, which is a regular calculation. Opening obligation 0, interest at 8%, obviously 0, discounting factor at 1 second. This should be 8%. Okay. Calculation is correct. Only thing is, मतलब वहां लिखा गलत है. Okay. 1 divided by 1.08. So what is accruing today will be paid 1 year down the line, after 1 year. So therefore, 1 year ka discounting. Present value of that will be 13 crore 50 lakhs, 1,350 lakhs into 0.9259. So that comes to 1,250. Opening balance, interest at 8%, discount rate. So the closing comes to 2,700. Have you understood this build up?
यस सर।
Okay. Jeannie, did you follow? Yes. All right. And now we start with the accounting. Now we start with the accounting. Okay. Accounting treatment. First one. Total termination benefits payable is 5,100. So entry will be employee benefit expense account debit to provision for termination benefits 5,100. You have already planned the termination, so 5,100. Payment of termination benefits. First year, I have paid 1,350 payable within 12 months. So provision for termination benefits to bank 1,350. Next, I will unwind the discount. I will unwind the discount in respect of termination benefits. So that comes to how much? 37 lakh 50. This is nothing but out of 5,100, you have paid 1,350. So 3,750 into 8%. So that comes to 300. So closing balance is how much? 3,750 plus 300, 4,050. Recognition of other long-term benefits. This is the service-related benefits, which is this value, 1,250, which is 2,700 by 2 discounted. So that comes to 1,250. Are we okay till here? Yes. Till 1,250, are we okay? Yes. Monica,
सर।
समझ में आ गया?
यस सर।
ठीक है. And then the next year, I will pay the provision for termination benefits, 4,050. Closing balance of that will be 0. I will unwind the interest cost, ये जो 100 है. This 100 I have unwound it. So interest to provision, recognition of expenses, 1,350. This is this expense, 1,350. Okay. Finally, I make payment of 2,700. So that is also closed. So this is a combination of service benefits spread over 2 years and the termination benefits that will be settled partly in the current period, partly in the next period. Is it okay? Yes. So
Yes.
termination benefits are also done and taken care of. Okay. Now, Appendix A, accounting for contributions from employees or third parties. Okay. Go through this. Theory है. Don't focus on this to a great extent because इसके ऊपर questions नहीं आते. Okay. Appendix A, Appendix B, minimum funding requirements. Okay. What is addressed here? You can just go through it, read it up. There are no practical questions on these matters, which is really there. So out of all the slides which I have given to you as a homework for theory, the major ones is appendices A and B. That's it. Nothing else. Okay. Just आपके knowledge के लिए पढ़ सकते हो. There is no hard and fast requirement that will come out of this. Okay. So apart from that, have I left any theory slide left unattended? I don't think so. ये cover कर दिया. Let me start from the beginning. This is done. This I explained. This I have explained. This is done. Profit sharing plans. Yeah. So I have left you with this multi-employer plans. Multi-employer plans continued, group administration plans, risk sharing plans, and state plans. Insured benefits I have done. Oh, sorry, given you for homework. State plans, insured benefits. Accounting I have done. After this, I think all these slides I have more or less continued with you. Okay. Yes. Okay. Ultimate cost I have explained. This one also okay. ठीक है, more or less it's all done. Yes. Yes. ठीक है. So that's it from my side. Almost all are done. थोड़े बहुत disclosures, थोड़े बहुत appendices, and then we are sorted out. Okay. Anybody has any doubts so far? Okay. Thanks, Jeannie. Thank you. Okay. Yeah. Hemant has a question. Sir, if company has a sabbatical leave policy, how to know how to estimate who will take such leave? See, एक बात है, अगर आपके पास पॉलिसी है तो you have to make a provision. Problem is how to estimate. You leave that to the actuarial valuers. Okay. See, if it is See, what happens is we are come to a situation where there is a generational shift in the way the employee thought process works. Okay. Earlier, sabbatical leave करके concept ही नहीं था because our generation, what I am, my previous generations, हम लोगों को सिर्फ काम करना आता था. Right? We were working sabbatical. My previous generations were even more into, working out for the office. So you typically have, so my previous generations, my professors, our parents, they valued loyalty to an organization. So you would typically find people in those generations who have worked for 10 years, 20 years, 30 years in an organization. They have not flipped jobs. I come from a generation where flipping the jobs is a very regular practice. 2 to 5 years, you stay in an organization and switch. That gives you the growth, that gives you the reason to learn, and also it enhances your perspectives. Okay. Coming to the next generation, I'm not sure of you, but the Gen Z, what we call, they come from a totally different background. So if there is a sabbatical leave policy, the Gen Z probably will definitely avail it. But people like me, we may not even be entitled because we have a switchover policy. But the forefathers, I mean our earlier generation, sabbatical to lete hi nahi the. So therefore, it depends a lot on how are you evaluating your employees. The assumption that X may take or Y may not take is something that is best left to your actuaries. Okay. Typically, when there is a sabbatical leave provision, you have to take that into consideration. Employee le hi lenge provision. Okay, they will be taking. So there will be some realistic estimates, some probabilities which will be worked out. And based on those probabilities, the likely sabbatical leave that has to be paid by the entity will be calculated pretty much like how we have done for the other employment benefits like pension or whatever. Okay, gratuity or whatever is there. So you will make a provision of that discount to present value and calculate in the same manner. Any modification to that will hit the P&L at the time when you are expensing the provision. Is it okay? Yes. All right. I will be sharing you this presentation today because it contains my notes. So ये मैं आपको दे दूंगा this presentation. Okay. All right. ठीक है. Anything else? Anyone? Perfect. All right. Great. So that's it from our side. So we don't have a session. You don't have my session on Tuesday, but we will be continuing from Thursday. I think the next standard that we have is Ind AS 37 that deals with provisions, contingent liabilities, and contingent assets. Okay. So you can expect this by today, end of the day, to be uploaded from my side. Okay. That's it. Monica, anything else?
No, sir. Thank you.
Bhogya, yes, all right. Thanks, Vignesh. Thanks, Niranjan. Thank
Sir,
you. Yes, Soj. Yes, Jenny.
please upload this assignment also.
हाँ मैं ये असाइनमेंट भी डाल देता हूँ. ओके आई डू द होल थिंग. ओके.
Okay. Thank you, sir.
Yes, yes, yes. Sure. All right then. Thanks everyone. See you tomorrow. See you on Thursday. Okay. All right.
Thank you, sir.
Thank you. Yes. Yes, sir. Thank you. Thank you. Thank you.